New Delhi,
CNBC Business News.
Taiwan,
Domestic investors.
Singapore,
CNBC Business News.
There are many markets in China.
Hong Kong,
Linda Lee, CNBC Business News.
Singapore, the government says.
Authorities in Malaysia have begun.
Honda Motor is launching.
Hong Kong
seen
stock
on
exchange.
6 continents,
The world could be diffused.
70 countries. The most powerful boardrooms in the world.
China is calling for time
To more than 138 million homes. CNBC, first in business worldwide.
I'm Rico, Hizon. Hello and welcome to CNBC's Morning Call. It's Tuesday, January 13th, and at this hour, financial markets in Tokyo and Australia have just opened for trading. Markets in New Zealand are open as well. And now let's take a quick look at today's starting lineup. Sony Electronics president steps down. We'll be speaking to one market strategist who thinks this stock is still a powerful buy. And Hong Kong stocks are set for another slide today following the 6th biggest point drop ever on Monday. CNBC's Robert Stern will have more on where the Hang Seng Index is headed from here. And Japan's Ministry of Finance has announced that the level of bad debts in the banking sector has tripled. We'll go on the line to Tokyo to get an outlook on how the market is reacting to the news. And for our guest host today, we have Philip Chan. Philip is the head of research at Shenwan Wongo Securities in Hong Kong. Philip, good morning and welcome back to the show.
Nice
Well, another auspicious day on Monday.
Yeah.
The market dropped 8.7%.
That's right.
Do you see it dropping by the same percentage again in today's trading?
Not by the same percentage, but there's still probably some more volatility, you know, in the short term. But I do expect it to pan out very soon.
How soon before the market discounts this whole Peregrine fallout?
Well, the Peregrine sort of aspect is only part of it. I mean, there's other aspects as well.
High interest rates.
High interest rates, and also worries about the how resilient the Chinese economy is going to be in future. But I think in terms of like the other thing is obviously the dollar peg. But in terms of the dollar peg, I think I don't think that's going to change at all, right, in the near term.
We'll get into the dollar peg in a little while. Let's take a look first at Peregrine. It will be looked over by liquidators. After that, what happens next?
Well, normally you see it's like with any sort of collapse of a bank. I mean, liquidators look at it, and then they will see, you know, what could be salvaged from the company, you know, what could be sold off if anything, you know, because it's hard at this moment, and nothing's been released publicly about what.
But taking a look at the company, can anything still be salvaged?
There may be some, you know, portfolios of shares or other thing, maybe certain securities that could be sold off.
Some analysts are saying they have a huge China book, and if sold before the collapse or even during the collapse, it could have been worse for the stock market.
No, I think that you know, if they're going to sell off China shares, if they have got any China shares on their books, I don't think they're going to be so. I don't think that the portfolio is so large that it's going to severely affect the China markets. I mean, the China markets are already jittery on other factors. Even if there was a sell-off of stocks, you know, from a portfolio, it would only have a temporary effect.
What do you think will happen to their overseas operations? A lot of analysts are saying they could still be saved.
It's possible, yeah. It depends on how well, exactly how much is owned, right? Because not all of them are 100% owned. They could be sold off. It's possible. I mean, it depends on how the liquidators, you know, come to negotiate with the creditors. That's what the job of Price Waterhouse is going to be.
They've been in existence for the past 9 years.
Yeah.
What have they done right and what have they done wrong? Well, everyone knows what they've done wrong, but what have they done right?
No, they've been. I think they've created. They're not the only company which have listed red chip stocks, but I mean they've sort of built that sort of niche for themselves. A lot of the major red chip companies, existing ones and new ones, have sort of listed or placed stock through them.
But they really dug themselves a deep hole with this unsecured loan to Steady Safe, an Indonesian company.
Sure. I mean, you know, there's there's most financial, sorry, you know, it's happened before with other financial institutions. You know, the one major mistake, and you know that can sort of finish the company. It's going to happen again. You know, it's happened before. It's going to happen again.
All right, Philip, we'll have to leave it there for now. We'll continue our discussion on the Hong Kong stock market in just a moment. But first, here are some of the stories we'll be watching for you this morning. Hong Kong stocks look set for a rough ride this morning. That after the Hang Seng Index lost more than 8.5% yesterday as investors dumped shares in reaction to the collapse of Peregrine investments. Dealers warn stocks will come under further pressure today as speculation mounts of another rise in prime lending rates. Some analysts are predicting a rise in interest rates of between 50 or 75 basis points. Other market watchers say there are neither fundamental nor technical factors present which could halt the market's downward slide. Peregrine Investment Holdings, one of Asia's largest independent investment banks, filed for liquidation after the collapse of a rescue deal, erasing hopes of surviving the region's economic crisis. The company had been heavily exposed to Indonesian loans. After the collapse, Hong Kong's chief executive, Tung Chee-hwa, appealed for calm in the market and said the crisis would have little effect on banks. Japan's Ministry of Finance has ruled out using any of the 30 trillion yen set aside to stabilize the country's financial system to recapitalize insolvent banks. Senior members of the ruling party, the LDP, last month proposed using public funds to bail out all Japanese banks to restore confidence in the country's financial system. And electronics, and just a reminder, that recommendation comes from our guest and not from CNBC. So Philip, Peregrine Investment Holdings, is it just the tip of the iceberg? Are we going to see more companies following suit?
Not to the same degree. I mean, there may be some of the smaller, sort of more retail-focused brokers, you know, which could get into difficulties because the retail market is completely dried up.
So which specifically small retail-based brokers?
I mean, there could be. I'm just saying that there could be because, you know, the retail market has dropped off, and there are 600. Over 600 seats on the Hong Kong Exchange, and most of them are retail brokers. So, you know,
how many percent of the 600?
You're looking at approximately 75%.
75%.
You know, retail brokers.
So that's about 400, about 300 to 400, about 400.
About 400 something. Over. I think.
So about how many of those 400 to 500 could go under?
Well, no, not many. But I'm just saying that you know, if you had a protracted sort of difficult market, which we're probably going to see, right, in this coming year, where the retail investors are basically just keeping funds in deposits. Some of the retail brokers are going to find it difficult. It depends on how they've created their cost base. You know, some of them have low cost bases, you know, which you have to bear in mind as well. So they're not going to be affected, but some will be. Just depends.
Geoff?
Yeah, Philip, hi, good morning to you. I just wanted to get a sense from you on how this is going to impact the new issues market in Hong Kong. Obviously, Peregrine was very strong at bringing forward initial public offerings, particularly from mainland Chinese entities.
That's right.
I guess there are a number in the pipeline that Peregrine are handling that are going to run into trouble now. And do you think this is going to really slow up the pace of IPOs? I mean, obviously, market conditions aren't great at the moment, but what's it going to do to the IPO market?
Generally speaking, I think with the market conditions as they were even before the Peregrine crisis, it looked like the IPO market was slowing down anyway. There were a few issues at the end of last year which we understood were going to be listing, but then they got delayed right until beginning of the year, see how market conditions are. And I think that process is going to go on the longer that we have this uncertainty. So I think, yes, you know, obviously one major player in the IPO market is not there. That's going to slow things down even more because they obviously had a few issues. You know, one was Jinzhou Harbour, right, which they were supposed to price last week. That's going to delay more issues. But I think it's generally speaking that the CSRC is not going to grant new listings so easily anyway in the next few weeks.
All right, Philip, we'll have to leave it there for now. Sure. We'll have to take the short break. CNBC's Morning Call. We'll be right back.
Cut it up one time.
Let's talk about sex.
It's controversial.
I felt real danger.
It's glamorous.
We just love glamour.
All this pain is worth it. Trust me. I need a long break from the suit.
It's intimate.
Welcome to Talk of Asia. I'm Lorraine Hart.
It's about freedom.
I believe in God.
Listen, folks.
They only pay me for this.
Raw dog and mix.
We dig for the worldwide celebrities behind those sound bites.
My biggest dream is to make a musical.
And ask them questions that have the color of Asia.
Can I get my scripts, please?
Talk of Asia, weekdays on CNBC.
Come on.
The power.
And if you're just joining us this morning, we have Philip Chan as today's guest host. Philip is a research director at Shenwan Securities in Hong Kong. And now here's some of the stories we'll be watching for you this morning. Indonesia's So Philip, another land auction for Hong Kong.
Yes.
The first one in 1998, but definitely with higher interest rates and a slumping stock market, interest will be low.
I think so. Yeah, not going to be too much excitement there. Also with high interest rates as well. You know, there's no. But I mean, there will probably be. I mean, just limited interest. That's all. I mean, we saw that for the last land auction as well.
We have two commercial residential lots up for grabs, one in Tuen Mun and the other one in Yuen Long. So.
I mean, you know, Tuen Mun plots in the past have attracted some interest, but mainly from small developers.
Yeah, the last auction that we had a few months back, we only saw small developers attracting interest. But now, are we going to see the big developers?
The big developers have always been there, just on the sidelines. But whether they've actually bid aggressively or whether, you know, whether they're just there to watch is another matter. I think that at this moment they can afford to sort of hold off. They want to see. Because the outlook on interest rates is still not settled yet, so I think they'll hold off.
Geoff?
Yeah, I just wanted to ask Philip, anybody out there sitting on cash, they can afford to add to the land bank at the moment. Anybody got some money to throw around as far as the bigger developers are concerned?
Well, the bigger ones like Sun and Kai, I mean, I've always got strong balance sheets, and they could afford to sort of buy more land. But even some of the, well, obviously the property investment companies, even like Amoy, Hizon, they could actually afford to go out and buy more land. It just depends on, but they're very specific investors. If you look at, you know, the way they've invested in the past, it's unlikely they would go for you know, these kind of plots.
And briefly, before we go to our world news, what is your outlook for interest rates? Some analysts say we see a further rise of about 75 to 100 basis points.
Wouldn't be surprised at all. No, I mean, you know, like I said, the outlook for interest rates is still not settled. I think the government and obviously the banks are they'll put up interest rates as far as they need to retain, you know, liquidity in the Hong Kong market. They're not so concerned about what happens to the property market and the stock market. I mean, those are secondary.
All right, Philip, we'll have to leave it there for now.
Sure.
But first, a look at the latest headlines from Asia and around. You wanted to comment on one of Geoff's stocks to watch?
No. I was just saying that GSM is a European standard. It was created in.
And then you also have the CDMA.
Yeah, CDMA
which is a US
standard. Yeah.
And then you also have the VCD for video and VHS.
Yeah, nothing to do with telephones.
Nothing to do with telephones. Nothing to do with telephones. There's just so many formats coming out right now.
Right.
All right, let's now take a look at the red chip sector in the Hong Kong stock market. It has taken a beating so far this year. It's down 44.5%.
That's right. That's right. Well, I mean, it's you know, it's basically come back along with the rest of the market. But more so, it actually was coming back before we saw the fall in the HSI. With the red chips, though, the premium basically that people were giving to these stocks, because you know, there was asset injection stories going on all of last year.
Will that continue?
The asset injections will continue. I mean, we've already had in the last 2 months, we've had 6 or 7 deals right from the major red chip stocks. admittedly, you know, it's going to slow down, but it will carry on. You know, because these companies still have to grow, either organically or through acquisition, and they did that even before we had the red chip fever last year.
What about the restructuring story for the 8 shares?
Those will take longer. Yeah, I mean they were, you see, they were catching the attention last year, but they're going to take much longer than the asset injection stories, because the asset injection stories are you know, are sort of up and running. The restructurings take longer because you've got different ministries involved.
Hong Kong stocks have been battered over the past 6 or 7 months, down about 100% from its all-time high of about 16,800. Which stocks right now would you recommend? Could you give us some specifics?
If I was going to recommend the Hong Kong stocks, really just conglomerate stocks, CITIC Pacific, Hutchison, right? Because they still have good exposure. They have good exposure to Hong Kong, but also good exposure to China. You know, not heavily in debt. They've got good resources. I mean, you know, strong balance sheets, and a wide array of businesses, right, which is going to protect them on the downside. For red chip stocks, I would still look at the very good quality ones like China Resources, Guangdong Investment, Guannan, and Feng Hong, because they have, I mean, Feng Hong, Guannan, they have fairly recession-resistant businesses. I mean, the food manufacturing, food distribution, etc. Very strong.
Philip, we'll have to leave it there. Thank you so much for joining us this morning on CNBC's Morning Call, and hopefully we'll have a Happy New Year.
Thank you. Thanks.
Our guest host today has been Philip Chan, Research Director at Shenwan Wango Securities, and our guest host tomorrow will be CK Kong, Vice President at Credit Suisse, First Boston. And we'll take the short break, and Geoff will tell us what's up next.
Okay, Rico, well, as the famous singer Barry White might have said, we're going to talk electronic love after the break. Don't go away.